The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days at 11 o'clock Eastern, and being today, Wednesday the 4th of June. So, very interesting. A couple of things happened over the last, I'd say from yesterday's close into right this moment as we're speaking. And the forcefulness of the move up in a stock like General Motors, and I have to chuckle because we've been long General Motors and we've been in and out, and we aren't in right now. That's a shame, and I discussed it this morning, and it seemed to me that today would be an important session. And what is GM right now? GM is up $1.20, up 3.4% at 36.47. It's about 2 points higher than we had it the last time, and that's the way it is. I mean, you just have to do the best that you can, and if you miss something, you just have to say, okay, now we have to wait for another opportunity. And the only reason why I hesitated getting back into GM, both yesterday and today, is because market-wise, we needed this hour and a half to 2 hours on a Wednesday, middle of the week after the first couple of sessions of the week, where there was really mixed action, a bias towards the upside, but limited upside. And let me explain what I'm looking at. The Dow now is up, is down 5 at 16,717. I'm going to go, well, let me take this chart away. The chart that I'm looking at is the E-minis, and they've gone to a leg E, and this is a recycle to the upside. I'm suspecting that it's an E. But the 120-minute chart just had a beautiful H pattern. Now, we were looking at this. We were looking at these different formations, and I discussed them in great detail, that there was a channel. There was also the chance of a left side test of the 1916 level. Exactly 1916 was hitting the E-mini, and now it's up 2.25 after hitting 1916. It's trading at 1924, and that makes a new leg C in the 120-minute chart with at least a D to go, and the challenge will be to pierce the 1925 to 26 area decisively, because that could be where a leg D takes us, and then we might have a holding pattern into, I think there's news this afternoon, maybe even tomorrow, about this afternoon will be the Fed. I don't know if it's the minutes or it's at least some Fed speak. And tomorrow, I think, is this whole thing with Draghi. I'm not sure exactly. Those are fundamentals that I probably will have to check out a little later on. But at this particular moment, I just wanted to see price action. So that's very good because the E-minis trade almost 24 hours a day. I wanted to see what happened there. Now let's go. It's the beige book. Thank you, Terry. Now let's look at a couple of other things. So you've got the Dow having, let me just do this INDU. The Dow having hit exactly the 9-period exponential moving average support at 16,673. That level is at 16,674, so it went under it by a point. And now a lovely candle that so far the day's young, not even 2 hours old, and we're bouncing off that low bar. I can see a couple of patterns forming here, but all I'm going to say is the day is young. Let's see what happens, because if the Dow takes out 16,756, let me type that in, 16,756. If it takes it out, especially if it takes it out decisively between today and tomorrow, that's going to be very important, because I've got this as an F/B, a potential G/C. I don't think it's G/C. If it takes out 16,756, as I said to my subscribers, to my opening call, we have to consider that it's probably seen it's going to go to at least a D. Now, what's very interesting is in the 120-minute chart, look at this. So this is what I send out to my subscribers. That 9-period moving average, the MACD and stochastic are turning up. And this is what I said to my subscribers. In the pattern that we're looking at, in the 120-minute chart, I had already drawn in the beak. But I didn't know where it would be. But I did say under 167.75 in the diamond, the Dow diamonds. That starts a confirmation of the beak. Well, that beak could be very short. It could be very long. But the whole point is that the low of 166.58 went below the most important level of 166.79. So it's completed to a certain extent the obligations of this Chapman wave stalk leg formation. And now we'll see what happens, because very often when the beak is complete, and we don't know yet if the beak is complete, you're probably listening on the radio saying, beak, what is he talking about? This pattern looks like this. You've got a strong move up that I call a leg. It doesn't matter how many peaks, but you do a D or an E. And then it takes time and makes an oval formation. And an oval formation is the body. So you've got the leg, you've got the body. Then you wait for the neck to unfold, which should be at 1 penny above the oval part of the body. In this case, 1 penny above 166.79 starts the neck. Then you get the head formation. Then you get, that completes the entire move. And then you get the move down, which is the beak. Once that beak is completed, if there's a new buy signal in the technicals, that's usually quite powerful for at least an initiation of some kind of a V-shaped recovery. And then you're on your own. Then you have to look at other technical considerations, because the entire work of the stalk leg formation is completed. So I don't know if it's completed, but if it is, we're going higher. If it isn't, by the end of the day, we'll be pulling back. And we'll see what happens. Pulling back would be a little unusual with GM so strong. But I am looking at the volatility index 120-minute chart, which has gone to a leg C in a stair-step move. Pops up, comes back sharply. Pops up, comes back sharply, not taking out the 11.41 level. And we're going to be looking at the S&P at 926.09 has, in fact, started a leg E, if that's correct. It could be an E/C, I think. Yeah. So I'm watching all this. We'll go through it in more detail towards the end of the show. Meantime, what I'm looking at, and that's really important, is that the S&P right now, after being somewhat weak earlier on, is making a new recovery high. And this as well is either an E/C, maybe a C/E, because the MACD is still so strong and stochastics at 98%. I'm probably going to have to give it the leaning towards being much more positive. Now, this is going to be very interesting here, because the 120-minute chart might have recycled higher, but the weekly chart has just extended this leg E to the upside. So by every consideration, we're beginning to become rather overbought. But that overbought level can be sustained if that stochastic, which is trading right now at 98%, maintains that percentage. Because you know that when I talk about the stochastic down at the bottom in the 3-4% range, 2% range, that's flat. That is negative. It is very weak internals, and in this case, it's very strong internals. So the S&P, I just have to admit, it's looking very good. Let's do the QQQ series. The QQQ series hasn't yet made a new recovery high. We got out of our position. Maybe it was too early, but the fact is, and maybe it is too early, because if we did put a stop on the 9-period moving average, the Qs haven't even gotten there. The last high was 91.45, and today's high is 91.40. Just needs 6 cents. It breaks out to probably a leg E. Gosh, what a market, huh? IWM made that Chapman wave Roman candle. It tested it, went under it. Today's low of 111.16. We're up almost a point from there. That normally is a negative price action that we saw. So if the IWM, the Russell 2000 ETF, is able to get into the 112.75 area by tomorrow, it says, wow, maybe it can test the 113.84 for a leg C up in the daily. Meantime, the weekly has a pattern that I call the single leg A up. We've got to watch this one closely. My suspicion is it's not going to make a new all-time high, but the IWM is telling us that in this rotational aspect of the market, the IWM area is having a real tough time right now. So then we've got gold GC. I don't know what we're trading here. No, that's a Q. Let's go to Q. I haven't notated Q yet, but it's struggling. It really is struggling. The gold is down 50 cents at 12.44. I think there's a little more to go on the downside with gold. So that's what I'm looking at. Platinum is down, but we've got high-grade copper. Now I'm going to go to high-grade copper because that needs updating on that particular chart there. High-grade copper made a peak E. I discussed this the other day. I said, no, I'm not going to go into the copper area because I think there could be some kind of a daily pullback, and we're going to see if it breaks. I'd say 312 to 310 support. Well, it's a 3.09 right now. So the weekly chart on Friday is going to be really important. Looking at the TLT. Now this is what I wanted to get to. The TLT is trading down 0.06 at 111.51. I had a peak D in the Chapman wave. Remember the methodology? D's, E's, and F's. Got to be real careful. But at peak D, what happened was it went to the top part of the channel. I discussed this the other day when I was speaking with Tom in an interview. And it pulled back to the bottom part of the channel, but it's broken underneath. Well, that says that if the TLT, and this to me is really important. That's why I keep talking about cusping. We're on the cusp of a number of things right now. If, in fact, bonds are about to have a pretty sharp pullback based on the weekly chart, peak E in the TLT, and it's peak D in the bond contract itself, and it's E in the shorter term daily, then we will be looking at the chance that the market has in fact, the equity market has in fact recycled with those autos coming on strong. Maybe the steels and the aluminums will be picking up the heavy capacity, the heavy cyclical area. Maybe they moving to the upside, so it allows some kind of support as other sectors pull back. And that would say that bonds have had their run, short squeeze plus some buying, and now we're going to watch this real carefully to see where does the yield stop, or where do bonds find some support, and what kind of retracement to the upside, because bonds at 135 and 430 seconds right now, 130, yeah, if they're able to travel back up to the 137 and a quarter area, that'll be very positive action. If they fail to rally at all by Friday, it says, you know what, money could keep going back into the stock market. So the question in the debt about GM. GM had made a peak D at 41.85 in the monthly chart. So far, this can in June is really very positive because the two doji candles formed back in April and May. So I'm going to be watching this real closely. Gosh, missed another great opportunity to pop right back into GM. It's acting very well. Can't deny that. I'll be back. 877-927-6648. Dow's down 8. S&P's up $1.25.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. And the reason why I was talking about CUSP and making a big deal about it and discussing it in terms of inflows and outflows, migration toward or away from sectors. See, now the Dow's up 5 and the S&P's up almost 3. What was really important is that I needed to see in the IBB, which is the iShares Nasdaq Biotechnology stock, if it did make that C. I mean, that's the technique said should get a D. It might not go all that high, but we're going to watch to see where it goes. And that's saying to me, oh, okay. Now, let's just run through a couple of things. You've got BIIB. I haven't followed this for a little while, which was one of the best biotech stocks, Biogen IDEC. It's in a leg B, A, B, C, D. So it's recycled A, B, C, D. It's holding tight right now. And let me just put this in so that you can see what I'm doing. A, B, you know what? It could even be a little more. So that's 301, 300.95, 301.21. Yep, you got to do. You need an eagle eye for this. C, D, right there. So this is an E, and this is even that's recycled E. And now I can draw this pattern that I'll have to draw right here like that, and like that. And we're going to see, has it got power to push even higher? Not to the all-time highs, but higher towards halfway into that. And the all-time high was 358.89, 358.89. And what we've got right now is it's trading at 318.69, and the low was 272.02. So it's almost halfway. And I'm going to see, can this get to the 325 area? And if it does that, has this recycled as a brand new entire brand new move to the upside. One of the best of the biotechs. Look at Amgen. Let's look at Amgen. Amgen is in a brand new AB, 1372 double top. So that's A, B, C, and D, leg D, in a counter trend rally. When these things fade, how they pull back? Will they test their major lows that they made? That's going to be very interesting. Why? Because if they've recycled to a new move, the biotech stocks, they are part of that whole momentum group. And as a momentum group, it says, hey, when we get on track, fund managers keep buying us. That's all they do. That's what they want to do. They've done it successfully before, and they'll think that they can keep doing it successfully. So when I'm looking at these biotechs, I have to watch them real closely, because a brand new move to the upside says that the IBB could in fact recycle and go right back to that high of 250. Well, it was the high was 275, wasn't it? Yeah, 275.40, 275.40. And that's going to be very important as far as I'm concerned. Now, when I'm looking also at the areas that were lagged, like the financials, look, this is a very strong candle today, up 5 cents at 22.43. Look how many green candles there have only been since the low in the XLF on the 15th of May at 21.56. There's been a peak A and a peak B, a peak, there's no peak C because this is F/C, I'm calling it for now. Probably C is the best thing to call it. But there's only been one red candle. That was at peak A, and that was on the 20th of May. And ever since then, there have been beautiful green candles. And that says that the buying is finding pressure every day, as every pullback becomes a buying opportunity because it closes at or close to the high. So I cannot rule out that the XLF is making an attempt. And if you've got the banks and if you've got the automobile sector, the auto sector, because that includes trucks as well, moving nicely to the upside, even if it's not spectacular, as long as it's moving to the upside, that is rotational support. And it says that the weak stocks, they can be weak, but as long as you've got the stocks to cover for them and to more than make up for any weakness, that is important. So I'm looking at the XLF very closely. I'm looking at the rebound in an Amgen, AMGN. How far up can it go? This is leg D. In the daily, this is only leg A up. In the weekly, I have to call it a counter trend rally, but there was a down arrow over there. So a lot's going on. A lot's going on because that money, if it keeps flowing from the bonds back into equities, is going to give support. So I wanted to give the response that the market's having right now to this inflection. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Everyone, Basil Chapman. We're back. Dow's up 6, S&P's up almost 3, and we're going to go to Frank in Lexington, Kentucky. Hi, Frank. How are you?
Hey, pretty good. Lexington, Massachusetts, though.
Just took it for granted that it's Kentucky. He doesn't know that Lexington, Massachusetts is quite an important place. It has been historically, right?
The birthplace of liberty.
Absolutely. So, Frank, you're looking at?
DBD, Diebold, it's pronounced.
I've never known how it's pronounced. It's Diebold or Diebold, but I guess Diebold is what most people say. So, Diebold is DBD, trading at 37.11, down 37 cents. I got a guess here that I think I know what you can ask about, but I'll ask you, what are you going to do with it, or have you done?
Well, I'm long, and I've been long for several months, and I've been watching this consolidation, wondering what it's going to do. It came down pretty sharply right at the end of April, and it seems to have recovered, but it's not showing any signs of life.
So when you say you've been long for a long time, you've been long from like in the 20s or so?
The low 30s, high 20s.
The low 30s.
Yeah.
You see, what I'm looking at here in the monthly chart, the U-shaped pattern or the cup formation that's just formed should have allowed it to go a little bit higher after the successful, in fact, two successful lowercase h pattern retests, and they were successful. I'm a little surprised that after the doji candle of last month, the entire month, a tiny little candle, I can't believe, it never has such a narrow trading range. It had a trading range of 38.21 to the upside and 36.20, a 2-point range for the entire month of May. To me, that's really weird. So what we've got now is the MACD is strong, stochastics pulling back. The price in the monthly chart says any close on a monthly basis below the 36.20 of last month, but to be safe, 35.87 is the 9-period moving average. Any close, I'm going to say, below 35.70 must be considered at least a negative, especially since the general market has tried to participate, at least to see stocks that are involved in the type of technology that Diebold does, which is, I know you always see them at at the cash, what do you call those things?
Cash machines, yeah, ATMs.
The ATMs, that's what I was looking for, ATMs. But now I'm beginning to see an incredible amount of competition for those machines. I see some names I've never seen before. So when I look at that, I'm saying to myself, wait a minute. If there is competition, it should show up in the price of the stock. Now we go to the weekly chart, which has got two buy signal and buy modes going to second peak D. And this second peak D, this is a very interesting one because the second peak D is is in April, week of April the 4th at 41.45. It pulls back in two troughs to the downside, trough A, trough B. Then it makes the H pattern, the lowercase h. I'm going to draw this in so that I've got it right here. I can always reference it. And this looks to me like it could be a failure pattern. The reason why I asked you where you got in is that it looks to me as if Diebold, DBD, needs to test the low of 36.20, which was made the week of the 9th of May. Now, that to me is going to be really important. Why? Because two things are happening. One is that the daily doesn't have much support under that until it gets to the area of 35.80. And if that doesn't hold, there's this huge candle, spike up candle of the 13th of February from 33.17 to 36.53. So this is my recommendation. Since you called me and just for an analysis, here's my recommendation in terms of the analysis based on the fact that you already have the stock. My suggestion here, and you don't have to do it right this very second because the market is leaning towards rally mode at this particular point, which should give some support to it. It's down 39 cents. But this is what I'm going to suggest, that some part of your position be taken off right here at 37.09, somewhere in this area. So it could be a little later on the day, but somewhere about 37. And the reason why I'm saying that is because the strength of the move on a technical basis from the low that was made just recently on the 7th, let's see, was that this? Yeah, on the 7th at 36.20, went to the 38.21 area, and it took almost the whole of May to do that. So it took time. It had all the information there to say that if you were long at that peak C that was made, confirmed on the 28th, that if it held the 9-period moving average, if the MACD was still rallying and the stochastic didn't fall, but stayed in the 80% area or 79% area, it could go to a D, and it couldn't do that. Now, I don't know what the reason is for those two big ugly candles, the one on the 4th of April and the one on the 29th. It looks like a news-related, spontaneous, positive outburst pre-market that carried through to the opening at 40.17. It goes to 40.25 and then plunges down to 36.60, and it's gone even lower since then. I'm going to make the suggestion that you take something off right here. Now, the big question for me is, if I was holding long, would I want to give back good gains on a stock that is not showing upside potential when the general market does? and yet it's showing actual weakness. And my answer to you is, I don't really want you to completely get out of this if it's going to have a turnaround by the end of the week and go up to 37.60. I just don't see what's going to make it do that. This is the opportunity right here. And yesterday, and it failed. So my first recommendation is take something off right now, this 37.10-ish area. And the second is you can do one of two things. You could say, taking off something here, but if it takes out the low of the 21st, 36.87, which is just a little bit lower down, 30 cents. If it takes that out, I want to make a decision about taking something more off, or I would say to you, if it starts to close under 37, even today, I'd probably want to take a good chunk of this off. And the only reason is it's had every opportunity to rally. It might need to get to 36.20 to test for a successful or unsuccessful H pattern. I don't want to be there if it suddenly slides under 36, because that's going to be a failure pattern. But if it starts to rally, you can get back some of what you've just taken out because you have a 1-point cushion. You know what I'm saying?
Okay. Yeah.
So here we go. Let me just sum it up. I take something off right now.
Yeah,
I think about taking off either the rest or at least a partial position if it goes under that the low of today, or definitely if it goes under 36.87. Then I'd wait for the test of the low that was made at the 36.20 level of the 7th of May. And if it's successful, you could have a bounce back. It could be in a trading range, just making an H pattern from the low 36s to the mid 37s, and then it keeps bouncing. And you could even trade that very nicely. In fact, we've looked at stocks over the past year that have had absolutely fabulous trading levels, and if you traded them, you could have made as much as if you had a stock that went from one position to a fabulous move to the upside in one move. So this might be that, but it really has to hold that left side low. So I hope it helps you.
Yeah, absolutely. Thank you very much.
Thank you very much. And then, Frank, the only reason for holding some portion of it, if it doesn't break under 37 today, is that if it bounces by tomorrow, you're at least still in the stock, but it really does look weak. Thanks for tuning in. I'll
all right. Are you going to look at TLT today?
I will look at TLT just as we're wrapping up. Right now, I'm going to go to Ben in Tallahassee. Thanks for calling, and I will look at TLT. Let's go to Ben in Tallahassee. Hi, Ben. How are you?
Hi, Basil. Great. Thanks. So the good old IBB,
yes.
I know the stochastic, and it's still above the 90 in May, and I believe it just made leg C today in the daily.
Leg D. The IBB is in leg D. Let me just explain what I'm looking at so that we can all look at the same picture. Okay. Folks, we're looking at the IBB. This is the iShares NASDAQ Biotechnology ETF. I'm calling the low of 207.48 on the 15th as the low that took it to a peak A at 235 in the 235.80s back in the mid-April. It pulls back, starts another move, fails to break above that, pulls back, so that becomes A-, second A-, then it becomes a real A on the bounce on the 13th of May to 233.93. B is at 236.28 on the 22nd of May. C is at 242.28 on the 29th, pulls back for 4 days, and today it breaks out, and it's in leg D. Now, the BIB is a different one. BIB is only doing D today. So this is the one, I believe, let me just, making E today. It was one ahead. So, yes, so IBB is at 242.92, up 2.07. So your question is?
Yeah, I took a stance, a position yesterday, and rather than, and I was looking at it as a 2, possibly 3 position short, but I was thinking it was in leg C, so even better that it's in leg D. And I was just looking for where you think that the high point would be where you would absolutely get out. And it helps tremendously that it's in leg D versus C. Yeah,
yes, it does. And the 120-minute chart, now that's the thing. See, is this now leg brand new B or is it a G? Has it recycled to a B, moved to the upside? So the way I'm going to answer that is that the day is young, so the 120-minute chart will just be the benchmark just for the moment. The stochastic's at 87% and the MACD is just cross positive. So my leaning now is to say, if over the rest of the day and into tomorrow, the IBB takes out 244, I have to lean towards a B rather than a G or whatever it is. I have to lean towards a buy mode unfolding in the 120-minute chart. If by the end of the day it fails and it closes under 242, then I'm going to say, aha, I need today to confirm it, but that was a sign of weakness at a recovery high. Now the thing about the leg D and the IBB's daily chart, not the weekly still needs a lot of work technically, but the daily says the MACD is still very strong, and the stochastic's at 89.49. So here's my thinking. You have a position that would be on the short side, and it's a starter position. I'm going to suggest don't get carried away. I agree with the idea, the concept of three positions, but I would prefer the one position is the position just under C, peak C in the IBB. Now we're in the position that says don't add against the grain, because D can go to an E, could even go to an F, it could recycle. A whole bunch of things can happen when the stochastic is so strong. So I'm going to suggest handle the trade on the first position. I wouldn't give the first position too much room. So in the first position,
maybe do a buy stop on the way down, where it actually I add to it as it takes me in on the way down.
So
that's another option, I guess.
Yeah, so now what I'd be looking at is probably wait for a peak D to be established. Okay. That might be tomorrow. It might not. We'll see. That means it has to be lower than today's high. And then if there's a pullback in the general market and IBB tomorrow, you can add to that position on the short side with a stop on the second position, 1 penny above today's high. Make it as simple as that. So you've got a little bit of what you'd call now an initial position, and I would trade around the second position. I want to see a confirmation that the IBB has now gone under 238.94, the 9-period moving average. Call it 238, and it's done it for 2 out of 3 sessions. And at that point, I'll say, whew, finally, the IBB is giving up. This is not a brand new buy mode that's going to continue to all-time highs. A really great question, and the only way I can handle it is to go one step at a time. This is leg D. I'd wait for peak D before I'd establish any other position. That's number one. And number two is, in the general market, if the general market is drifting higher, as it is right now, this isn't a powerful move. It's Dow's only up 2 and the S&P is only up 2, but it is a move towards all-time highs and recovery highs in the indexes. So I don't want to fight the trend. So the IBB has been one of those areas. If you manage to handle it correctly, it's been very rewarding. And if not, smacks you on the nose. I don't want you to be in that position. I want you to have one position, and let's just deal with the next one as waiting for a peak D to be established. Means we'll have to wait the entire session tomorrow. Maybe towards the close, you'll have a confirmation that you can add another position. Stay with the one position, and let's do it. And I'll be talking about it over the coming days, okay?
Good. Thanks a lot, Basil.
Thank you very much for calling. That's Ben Tallahassee. We'll be right back, and we will look at bonds again. Basil Chapman, Tiger Technicians out.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risks risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I had a question in the chat. It's a great question because I've been looking at some of these and I'm looking to say, what will suffer when other stocks are working nicely to the upside? And now we've got one, BMY, which is Bristol Myers Squibb Pharmaceuticals, made a high, a peak D in the Chapman at 57.49 back in March 2014. It's trading at 47.56 right now. The weekly chart made a peak, alternate count peak G, and it's pulled back and it's making that pattern that I call the lowercase h. But look at this one. Now I can't turn this sideways, but you know what a staple looks like a bracket, right? Well, if I turn that on its side, you would get a head and shoulders pattern right here. And that arch formation says that if the low of the 14th of April of 47.42 is not held and Bristol Myers Squibb goes right through it, you've got to be careful because I'm suspecting that Bristol Myers Squibb, BMY, is in fact making a significant hat-trick top. That means a type of consequence in price and time. So the question was, where would I buy? Where would I consider it? What was the question? The question was, Basil, if time, can you look at BMY looking for a pullback to buy? I don't. It's a dividend stock, yes, but would I buy it? I don't want to buy something that has a capital loss. A capital gain on the way up was fantastic. Now I think it's the other way around. So I personally would see how it holds the 47 6 to 45 area if it breaks under that support, because if it takes it out, the next real level of support is down in the 41s. So I'd be very careful about buying it. And then I'd buy it only as a retracement, if anything, but I actually would have it on my radar as a long. I'd wait for a bounce. I guess you could trade the bounce as a trade, but not as a buy and hold. And a bounce towards the 49 area, to me, would be an opportunity to look as a potential short. So now the TLT was the question. So, folks, as we're about to wrap up, Larry Pesavento will be here straight after me. And great program all day. My service is the opening call. Check it out, front page of TFNN. You get 2 weeks free. Now, just a real quick thing is that now Larry gave a great call on bonds the other day. It coincided with my peak D at 115.19 on the TLT. That channel has been broken. That's fine. Channels can be broken, but it is the speed and the dexterity of moving back up. If, in fact, there is no further rallying in the if there's no further rallying in the TLT, and it can't even break above 112.70, it's at 111.48 right now, but instead it breaks under 111, be very careful, because that's telling me that money could start to flow from bonds back into the stocks, and it's a rotational aspect. So let me just sum this up real quickly. We'll look at the Dow. I always like to use the Dow. You could use the S&P. I like the Dow. If the Dow in the next 2-3 days breaks and closes under 16,600, be careful, because it's starting a short-term sell mode. If, in fact, it breaks above 16,756 today or tomorrow, that's very positive, and I consider that it could then go not just to leg C, but even to a D, probably rally into next week. So this is a very critical period right now. Why? Because the VIX has just begun to wake up, but waking up is absolutely no good. It's trading at 12.01, up 14 cents. Woohoo! But that's nothing. Until the volatility index can start to climb back into the 13s and hold. It's got to hold. It can't do it one day and then pull back. It's got to hold there and have higher highs and higher lows. This is leg B, but it's a very small move. Oh, wait, this is leg C. Oh, my goodness, we might have actually outdone ourselves. 11.29, 11.36. Oh, this is a brand new leg. Okay, this is A. No, this is only a leg A. This is all we've got, a leg A to the upside. It's a start. But you've got to see something that says to you, sustained power in the volatility index means that there's buying pressure in the VIX, that's selling pressure in the market. Until you see that, we can have a high-level consolidation here. I'll be back tomorrow, folks. Have a great one. And I don't have time for FB and Facebook. Stay tuned for Larry Pesavento.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.